What's up, everybody? It's Coffee with Teresa, the channel where you learn about business, finance, and entrepreneurship all during your coffee breaks. And in this video, I want to talk about where the market can move forward for the rest of the week. So let's get started. I think looking back, it was pretty obvious that the market was going to break to higher highs over the weekend, especially since we had such a strong jobs report on Friday. Now, I'm making this video a little late since we're already on Tuesday, but I think you'll still find some of this information valuable. So with the diamonds, DIA, the Dow Jones, the way this closed on Friday was similar to a hammer shape. We previously had this resistance here, where the high was around March 18th, and then we went up to this resistance on Monday, we consolidated a bit, and on Friday, we had almost this hammer close. So now, hammers are usually found at the bottom of a downtrend, but if you notice the oscillators, they looked like they were trying to go higher. And on top of that, you had an increase in volume. So this meant that the buyers were still in control. And so I think if you saw this on Sunday night, for example, it was safe to say that this was going to attempt to break this resistance. So I had my target around 335, and yesterday you could see it ran past that to 336.15. So if you're looking to go long, I would wait for a small pullback and set your stop loss just under the 20-day moving average, since that has worked as a good area of support in the past. If we were to look at the IWM, in my forecast last week, I mentioned that I didn't think we were going to break this resistance level, but that we would also be going up. So look what it's doing now. So far it's moving just as predicted. So just be careful as it starts to reach this level, since it may start trending downwards. And if that happens, this starts to look like a head and shoulders pattern. So this would be the shoulder here. This is the head. And if the market pulls back, it would be the shoulder. But it's impossible to tell for sure where the market will go in the next 2 weeks. So I would just keep an eye on this one, because if it does start breaking this neckline, this line here, this is where things could get ugly if it starts to break down. So the idea with head and shoulders, the idea with this pattern is that the neckline is a critical support level because it's serving as the structure to this possible head and shoulders pattern. So if you want to get an idea of how far it could drop, you can do this by taking the distance from the neckline to the top of the head and then pulling this distance and pushing it downward from that neckline. And if you start to see it break down, the next price target after that would be this point here. And that's a significant pullback. That could start to look a little ugly. But that is what we can expect if this pattern holds. So just remember, it's risk on, manage your trades, and set stop losses before getting into any trade. If we look at the spiders, in my last video, I talked about us possibly breaking to new highs, and we've done this for the last 2 trading sessions. But now I'm expecting a small pullback to retreat to this previous resistance line at 397.85, and then possibly even back to the 20-day moving average, which is 393.29, as it's done several times before, like here. So let's move on to the VIX. Last week we talked about the VIX to continue its pullback and for the markets to rally, and we talked about the VIX filling this gap right here. As you can see, that's exactly what happened. So now usually what happens when a gap fills, you'll see a reversal happen, and this is especially true for the VIX. Look at this gap here, for example. It fills and then it immediately reverses. So this is what we're looking at for the VIX. And it's important to remember with the VIX is that it generally moves in the opposite direction of the market, right? And so as the VIX gets very overextended, for example, last March, we were very overextended. The markets tend to become more bullish, which you can see here. The VIX started coming down and the markets start going up. So now that the VIX is due for a reversal, that's not great news for anyone who's long. So my target on the VIX is 28.50. And with that, let's move to the Qs. And to be completely honest, the Q surprised me. It made a big move yesterday, and with that move, it closed this gap right here. So I would just watch the volume on the Qs, because if it starts to decrease, we can expect a pullback. Also notice that with this move higher, there's a small gap here, and most of the time gaps fill. So I don't know if any of you guys are big gap traders, but for me, what I like to do is keep it as a reference point, because a lot of times as the price heads into the direction of the gap, it starts to act as a sort of magnet. So it'll move towards the gap and try to close, and eventually it reverses. But it's not a science, so just take it with a grain of salt and just use it as one more confirmation, but it shouldn't be the only thing that you use. And given that the VIX may start trending higher and we may be due for a pullback in the near term, for the Qs, I believe a solid support level is this $305 level, and I think it's actually going to retest this line soon. And remember, if you know how to do anything other than just going long, if you know how to trade puts and manage your risk correctly, you can make money on the downside too. So just keep that in mind. So those are my thoughts this week on the market. In my next video, I'm going to give you some ideas that you guys can use for this week to trade options with. If you found this video helpful, please drop a like since it really helps out the channel, and share it with a friend. And don't forget to subscribe so you don't miss the next video. Thanks for watching, guys.